Imagine waking up one morning and seeing money deposited into your account. Not because you worked overtime, not because you sold something, but simply because you own a few stocks. Now imagine that payment arriving again and again every few months for the next 10, 20, or even 50 years. It might sound unrealistic, but some investors are quietly building portfolios that generate income for life, using a simple strategy: owning companies that never stop paying dividends. In fact, there are businesses that have paid investors consistently through recessions, financial crises, market crashes, and even global pandemics. While most people chase hot stocks hoping for quick profits, smart long-term investors focus on something much more powerful: companies that pay them cash year after year. And here's the crazy part. Some of these companies have actually increased their dividends every single year for more than 40 or even 60 years. That means if you owned them decades ago, your income from those stocks would be significantly higher today without you doing anything at all. This group of elite companies is known as S&P 500 Dividend Aristocrats, and they represent some of the most financially stable businesses in the world. These are not risky startups or speculative tech plays. These are global giants with strong cash flow, loyal customers, and proven business models that have rewarded shareholders for generations. But here's the question most beginners ask. Why would the company give away its profits to investors in the first place? Why not keep all the money and grow the business instead? And more importantly, how do investors identify companies that can continue paying dividends for decades into the future? Understanding this is one of the most important lessons in long-term investing, because dividend income can transform the way you build wealth. Instead of relying only on stock prices going up, you can create a portfolio that actually pays you while you hold it. In this video, we're going to break down exactly how this strategy works. First, I'll explain what dividend stocks are and why some companies commit to paying shareholders year after year. Then we'll talk about the powerful concept of dividend aristocrats and why investors trust these companies more than most others in the market. And finally, I'll show you 5 dividend stocks that many long-term investors believe could keep paying dividends for decades. Businesses with strong histories, stable industries, and reliable cash flow that allow them to reward shareholders consistently. By the end of this video, you'll understand how dividend investing works and how some investors are building portfolios designed to generate income not just for a few years, but potentially for a lifetime. When investors talk about dividend stocks that can pay you for decades, one company almost always appears at the top of the list: Coca-Cola. This beverage giant has built one of the most reliable dividend records in the entire stock market. The company has increased its dividend for more than 60 consecutive years, which makes it part of an elite group known as Dividend Kings. Coca-Cola's business model is incredibly powerful. Instead of producing and distributing every drink itself, the company mainly focuses on branding, syrup production, and licensing, while bottling partners handle distribution around the world. This asset-light model allows Coca-Cola to generate massive cash flow, which is one of the main reasons it can continue paying shareholders every year. Another major advantage is its global brand dominance. Coca-Cola sells products in more than 200 countries, and its portfolio includes more than 500 beverage brands, including Sprite, Fanta, and Minute Maid. Even during economic downturns, consumers still buy affordable drinks, which makes the company relatively recession-resistant. What makes Coca-Cola especially attractive for long-term investors is its predictability. People drink beverages in good economies and bad ones. That stability means Coca-Cola generates reliable cash flow year after year. Another factor investors love is the company's pricing power. Even if costs increase due to inflation, Coca-Cola can gradually raise prices without losing significant demand. This ability helps protect profits and maintain dividend growth. For income investors, Coca-Cola represents the classic buy-and-hold dividend stock. Someone who bought shares decades ago would have received thousands of dollars in dividends over time, often far exceeding their original investment. That's why Coca-Cola is often considered one of the most dependable dividend machines in the stock market. Next on the list is one of the most diversified healthcare companies in the world, Johnson & Johnson. Healthcare is one of the most stable industries on the planet because medical demand never disappears. People need medicine, treatments, and healthcare products regardless of economic conditions. Johnson & Johnson operates across 3 major segments: pharmaceuticals, medical devices, and consumer health products. This diversification creates a powerful financial foundation that allows the company to generate consistent revenue streams. What truly makes Johnson & Johnson remarkable is its dividend history. The company has increased its dividend for over 60 consecutive years, making it one of the longest-running dividend growth companies in the market. Healthcare companies like Johnson & Johnson benefit from several powerful long-term trends. First is the aging global population. As populations grow older, demand for medical treatments and devices increases. Second, healthcare spending continues to rise worldwide. Governments, insurance companies, and individuals all spend more money on healthcare every year. This provides large pharmaceutical companies with strong revenue stability. Looking at the chart, you can see that Johnson & Johnson has historically experienced steady long-term growth rather than extreme volatility. This stability makes it attractive for conservative investors who want reliable income. Another important advantage is the company's strong balance sheet and research pipeline. Pharmaceutical innovation creates new revenue opportunities, while existing drugs and medical devices generate recurring income. For dividend investors, Johnson & Johnson represents a powerful combination of defensive business stability and consistent shareholder rewards. Many long-term investors hold this stock for decades because healthcare demand is unlikely to disappear anytime soon. Another legendary dividend payer is Procter & Gamble, often abbreviated as P&G. This company produces everyday household products used by billions of people worldwide. Its portfolio includes globally recognized brands such as Tide, Pampers, Gillette, Head & Shoulders, and Crest. Because these products are essential for daily life, demand remains relatively stable regardless of economic conditions. Whether the economy is booming or experiencing a recession, people still need toothpaste, shampoo, laundry detergent, and diapers. This stability allows Procter & Gamble to generate predictable cash flow, which is exactly what dividend investors look for. Procter & Gamble has increased its dividend for more than 65 consecutive years, making it one of the longest-running dividend growth companies in history. Another advantage is the company's strong brand loyalty. Consumers often stick with familiar brands for years, which creates repeat purchases and predictable revenue streams. Procter & Gamble also benefits from global distribution. Its products are sold in nearly every country, giving the company massive scale and competitive advantages. For dividend investors, P&G represents the type of business that can continue paying shareholders for decades because its products are deeply embedded in everyday life. While many people think of PepsiCo as simply a soda company, the reality is far more interesting. PepsiCo is actually one of the largest food and beverage companies in the world, with a diverse portfolio that includes snacks, drinks, and convenience foods. The company owns popular brands such as Pepsi, Mountain Dew, Lay's, Doritos, Gatorade, and Quaker. This combination of beverages and snacks creates a powerful competitive advantage. One of PepsiCo's biggest strengths is diversification. Unlike some beverage companies that rely heavily on soda sales, PEPS ICO generates a large portion of its revenue from snack foods through its Frito-Lay division. This diversification helps stabilize revenue and supports consistent dividend payments. PepsiCo has increased its dividend for more than 50 consecutive years, making it another elite dividend growth company. Another important advantage is the company's global scale. PepsiCo products are sold in more than 200 countries, and its brands have enormous recognition worldwide. For investors seeking stable dividend income combined with a strong consumer business, PepsiCo represents a powerful long-term option. The final company on this list is unique because it doesn't operate in consumer goods or healthcare. Instead, it operates in real estate. Realty Income is a real estate investment trust, or REIT, which means it owns income-producing properties. What makes Realty Income famous among investors is its nickname, the monthly dividend company. Unlike most dividend stocks that pay quarterly, Realty Income pays shareholders every single month. The company owns more than 13,000 commercial properties across the United States and several international markets. These properties are leased to major tenants such as retail chains, pharmacies, and convenience stores. Because tenants sign long-term leases, Realty Income receives predictable rental income, which supports its consistent dividend payments. REITs like Realty Income are required by law to distribute at least 90% of taxable income to shareholders, which is why their dividend yields are often higher than traditional stocks. For investors seeking regular cash flow similar to rental income, Realty Income has become one of the most popular dividend stocks in the market. So here's the big idea most new investors completely miss. The stock market isn't just about buying a stock and hoping the price goes up. The real power comes when you start owning businesses that pay you consistently for decades. Companies like Coca-Cola, Johnson & Johnson, Procter & Gamble, PepsiCo and Realty Income have proven something extremely important over time. Strong businesses can reward investors year after year. Think about it. If you owned companies like these for the long term, you wouldn't just benefit from stock price growth. You would also receive dividend payments every quarter or even every month, simply for holding shares. And if those dividends are reinvested, something incredible happens. Compounding starts working for you. Your shares grow, your dividend income grows, and over time, that income can become a powerful stream of passive cash flow. This is why many experienced investors focus on dividend aristocrats and dividend kings, companies that have survived recessions, market crashes, and economic uncertainty while still rewarding shareholders. Now imagine building a portfolio filled with businesses like these. Instead of constantly trading stocks, you're building a machine that generates income over time. But remember, this video is not financial advice. Always do your own research before investing. If you enjoyed this video and want more content about dividend income, passive cash flow, and smart investing strategies, make sure to subscribe to the channel. And before you go, I'm curious, which dividend stock is your favorite? Let me know in the comments below.